Hello, 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 everyone. Mike Arnold here, co-founder, Pad Trading Partners, along with Bob Iacchino, who should have been done recording the podcast now. So watch for that coming out Monday morning. I will get it posted as soon as I get it. Should be a good one. Good weekend eve, Davey. Hey ho, waka waka. Tom about to go crazy with soldiers. So I have some comments on that. It's just a bear market rally until I get a long term buy signal, and I'll cover some stuff with that. It's a bear market rally. Good afternoon. Fed talking next week, so sure they will talk the markets as things are going up. What too much to killing to let the market deal with inflation narrative, and things are definitely getting overdone. I mean, the Amazon moves absolutely absurd, and the earnings weren't that good. But that's the mode we're in, and everybody who says everybody's bearish, the bottom's in. Actually, I see more people, way more people, massively bullish that have just been buying every dip, and now are like, see, this one keeps going. If the bottom's in, we're not. I mean, statistically, we're not at the bottom. Probability wise, we're not at the bottom. Now, could anything happen? Sure. You know, if Fed came out next week and said, hey, we're definitely pausing, we're even considering a rate cut in September, yeah, we'd go on a massive rip your face off rally, and I would see us being at new highs by the end of the year. Hasn't happened. Aloha, Kalani. How is it out in Hawaii? Hola, wavy. North of the border, wavy with the little Espanol. Good evening, Anissa. Thank you for being here. Yes, the FOMO is like never before. It's I got to jump on the rally. We're going to new again. If I hear anybody say we're going to new highs, especially new highs by the end of the summer, I've heard people say new highs by the end of the summer. You've got to be absolutely. You don't even understand market action then. If we have a 17% rally in August in these conditions, then a friend of mine called me today to tell me go all in now before it's too late. Yes, that's the same thing again. Well, you can also see it in Tesla. I got people saying now Tesla's going to 2,000 before the end of the year again. We're back to that. We're back to party like it's 1999, which is a very apropos song that Prince wrote back when? Early 80s? Because didn't we party in the tech sector like it was 1999 in 1999? People going all in weekly Tesla calls. I didn't even see that comment. Like it's 2020. Yep. Oh boy, we're thinking alike. Uh-oh. Good afternoon, Jacob. Good evening from London, AP World's Opus. Everything's going well over where? Someone turn on the casino lights. Yeah. Okay, let's just do a brief. How long do you think this will take to actually hit new lows? 2 months, 6 months? I could see us again rolling over September, latest September, October timeframe. We're going to see what the Fed has to say next week also, because with their going data dependent and really not giving any guidance anymore, the downside is that, okay, they're just going to shrug off everything. And we have, let's just go through let's do a quick recap. Chicago PMI, pretty big drop, but then everybody was partying off consumer sentiment coming in 51.5 versus 51. A little bounce, but those numbers still stink. And their 5-year inflation expectations only 2.9%. You know, if we're actually getting back to 2%, that should actually be below 2%. So again, I'm not taking these numbers as positive, but people are looking for anything to be bullish at the moment. Whether it's bearish is bullish and bullish is bullish. So when you see that, it's in bullish mode. You can see all the green, the mega caps, Apple off their earnings up big. Amazon was just, it's an absolute absurd move. But again, when you start seeing absurd, by the way, Chevron, really nice. They actually blew it out of the park with their earnings, and Exxon up nicely with that. They had earnings today. But, you know, Walmart also. Did it completely recover? I'll have to take a quick glance at that chart. I didn't look at it this afternoon. By the way, still just a 25 basis point hike in September and in positive gamma territory. So you get the diminishing effects with the dampening effect. So if anybody says positive gamma, drink, go ahead and drink. Let me just peek it. Let me just see this. Remember Walmart's horrible guidance, and look at this. Remember Walmart's horrible guidance? Yeah. Completely shrugged off, like anything's changed. They gave horrible through the end of the year guidance. But let's just buy it. And Walmart, you'd say, oh, well, it was a value. Look at the PE. This is for a Walmart. Okay? And this is before their next couple quarters of earnings that they already pre-warned on. And look at that. This is indicative of what you get. But you got to trade what is, not what you think should happen, because the timing can be different. By the way, let's just do a recap, then I'll get some other stuff. We have so many gaps in indices, it's crazy. We'll not get all crazy. Not all will get filled with 90%. We have 5 major gaps now. We're going to see some gap fills on eventual rollovers. S&P, remember, this is why, again, you got to play the stats. Close above the 62.5, favors the 87.5 to 100 range, just hit the 87.5. That's statistically very reliable. Is it perfect? No. But you got the close, the little pullback, another close above that, then the rocket launch move up there. So that finishes daily cycles getting towards the top, but not yet there. Remember, weekly cycles pinned at the top. Technically back to neutral mode on a weekly, but I will be watching again for another substantial rollover play. Where's my 50-week? Where'd my 50-week moving average go? That's weird. That's weird. There we go. There we go. That was really bizarre. Okay, weekly technically not overbought. I'm going to go into something real quick here because people keep saying, you know, because they mix signals and time frames. Hello, Lauren. Happy weekend, everyone. How does something like HKD? The SEC has been on vacation since the last administration, since Jim Clayton. The SEC has been on complete vacation. Let me just show you something. You know, in a bull market, all right, let me go over some buy patterns like in a bull market. Weekly buy. Weekly buy. Weekly buy pattern. Weekly buy pattern. And these weren't aggressive because they were in a bull market. Weekly buy pattern. Yeah, weekly buy pattern right there. Now, bear market. These are aggressive because you got the rotation zone against you. Weekly buy pattern, new lows. All stocks always go up. Weekly buy pattern, got a little rally out of it, new lows. Stocks always go up. Weekly buy pattern, new lows. Stocks always go up. Weekly buy pattern, little follow through. So let's just pretend we went to new highs now. I could say we called the low. Even though it's a weekly buy pattern, but I wouldn't actually say that because it's not a statistically high probability that it will generate new highs off that. But so many people will go, even that I've seen people say, we just called the low based off a 1 hour buy pattern. Really? We're going to new highs based off a 1 hour buy pattern. Then how many other 1 hour buy patterns that you have that you, in a bear market, you got your face ripped off? That people are just absolutely absurd. And that's where I want people to be real careful. And that's why I want to address the tom-tom phenomenon. It's sort of, I alluded to it yesterday with Bob, or this morning, when was it? When I said, okay, here's my trade in the SPY. Be very careful with this stuff. What's my long-term trade? We're going to hit 1,000. What's my stop? 0. My reward to risk is better than 1-to-1. I don't even need to stop at 0. I could make my stop roughly at, I'll give you even a more conservative. I'll make my stop 150. Okay? I better go a little lower. 100. I'm going with my stop at 100 because I think we could see it before we. So, yeah. But does that matter? Is that tradable? What might you sit through to get to 1,000 before? Let's just go with my initial stop before 0. Well, it's not going to hit 0 unless it's the end of the world, or unless the U.S. capital markets completely collapse, the dollar's done for, and who knows what's going to happen. Then I'm not real worried about my trading account. So does that help? So I'm calling that the SPY will hit 1,000 before it hits 0. Does that help anybody? Stocks always go up. Does that help? You got to put things in a time frame. And yes, at some point the SPY will hit 1,000. Is it going to be this year? No. Is it going to be next year? No. Is it going to be a year after? Probably not. So, but does that help you trade? Let's say I say just go buy the SPY, stocks always go up, and this thing drops to 200. Does that help you if you can't withstand the drawdown to 200? You know, that's where it gets absolutely absurd, and that's where people and a lot of these channels, even CNBC's in this camp now, with the, it's the rah-rah rally mode. Let's ignore anything important. So be very careful with a lot that's out there. That's why I like to stress also, you have to know your targets, you have to know your stops, and don't mix time frames. At some point, we'll be at 1,000, but it's not going to be there this year. So I can say stocks always go up, and not every stock always goes up. Now, let's just, all right, so back to just this. Sorry, I got sidetracked there. We hit the 87.5. We'll be watching starting the beginning of next week for a potential rollover pattern. The next rollover pattern will tell us a lot about the underlying strength of the market. You can see we're back in major overbought area. I mean, this is very significant overbought area. When your 5-period RSI gets this high, it's in rarefied air. You pretty much start getting into watch for topping patterns, especially with the cycles at the top on the day, getting to the top on the daily, weekly. Weekly's not quite there, but you got weekly cycles at the top, and we're coming up to some major resistance. This line is the 50% of the drop of the sell-off move. You got the 50-period exponential, and you have a major breakdown zone here. So am I saying it can't rally more next week? No, that's not what I'm saying at all. But we've met the minimum requirement for the close above the 62.5. And again, there was an aggressive weekly buy. But was it predictive that it's going to new highs? No, it's not predictive it's going to new highs. If you want the first thing I'm keeping an eye on is up here. I give that more of a medium-term signal. So we'll have to keep an eye on that. But that can even be a fake-out move with something this strong. Oops. I wanted this one again. NASDAQ. Again. In a bull market, the buy signals are really clear. Weekly buy. Weekly buy. And I'm actually going off the percent B indicator. You get into a bear market, first cross. This is where you got to be careful. Actually, there wasn't a weekly buy here. There was a weekly buy here. Couple week follow through rollover. Weekly buy here. Boom. Weekly buy here. So this one, and it's followed through a bit more. On the daily basis, again, overbought conditions, cycles hitting the top, actually eked out a new high from the June 3rd highs. That's why I've also reversed the harmonics here, because I'm not saying Monday has to be a top, but watching for another topping pattern, especially see here on the RSI, potential divergence. You got a potential divergence, and we don't necessarily need a double divergence because we're going against the trend is still overly down, even though weekly is in technically neutral mode with that bounce, but not in bullish mode. So that's where we sit. Dow hitting the harmonic at 37,832 harmonic, pretty much closing right there. We had 32,832 closing at 32,815. It's still trading for another 10 minutes. Yeah, I should see. Still watching for the Dow to eke out this 33,018 level to hit that 87.5 harmonic. So could get some follow through either Sunday night or Monday morning. And remember, you can have flows still going in with August 1st. So this is where I'm saying I'm watching for a topping area starting next week. It doesn't mean just randomly go short. Weekly basis, cycles at the high, coming up to a major breakdown area. Russell hitting that 87.5 after the close back on the 20th above the 62.5. And hitting that harmonic cluster. So I'm going to have to redo these levels for another better pause. But right now, my minor stop raise level will be about 1896 because I just pulled it back here, and that's the only pausing bar we have. Again, everything's trading the same. Right now, DAX, even the DAX, look at this move, the doubles. First, second target hit on that DAX double. I got a lot of comments with DAX. That's not going to happen. That double's a fake out move. Well, we've hit the first, second targets and coming in on that third target. So again, you don't know what's going to work and what's going to not work. You have to play the probabilities. Cycle's still rolling up on that. DAX, I'm watching again. Coming in with weekly cycles, not at the top, but getting into this topping area, coming back to a major breakdown zone. And remember, we still have a gap fill here in the DAX. So could we see some more upside movement into the weekly rotation zone in the DAX? Yeah. Notes, again, weekly trigger on the inverse head and shoulders. Notes, though, at a weekly top and a daily top. So I'm watching if you're watching for a move, again, can't give specific trading advice, but if you were looking for something in the notes, I'd be watching for a pullback first and foremost instead of chasing the move higher at this point. Also very overbought condition. But this move could take a few weeks to play out. It's a weekly big signal. So you could get actually a substantial pullback now that it's triggered without invalidating the pattern. I'll take a look at Meta in a little bit, Paul. Crude tried to get above here again and just a fake out move. I am being patient with crude. Okay, crude is stuck in this trading range pinned between a couple key levels. I am being very patient. Crude is actually still acting pretty bullish given everything that's going on, but I am being very patient with crude. So we'll reassess that next week. Natural gas finally coming back down. Still not in contact with the weekly rotation zone, but in contact with the daily rotation zone and a little pop up. It would need to have a substantial roll up before it gets an aggressive buy mode yet, but I'm watching still for at least a shorter term buy signal. Don't have anything yet. It's just making this is not a double, by the way. It's a horizontal. A short-term play would be a break above 836, but I'm being very cautious with that as well. Right now, gold, we've got the stagflation rally. Now watching with cycles at the top, watching for a pullback move to then come up with an entry in that. Same pretty much with silver and copper. Dollar index. Come on, dollar index. Still holding with that breakdown move, return to that weekly rotation zone. Still no great buy setup yet. So still sitting on the hands. It would be an aggressive buy on a close above Friday's high going into the beginning of next week. VIX, again, the potential double never triggered. When we broke down, remember I was watching this key area which we closed below yesterday, and then we just followed through today. I'm watching still for a bottoming pattern to come in next week. And then that would be the topping at least a short-term topping pattern in the market. So I'm watching for this key support coming in a little lower. The yen actually a pretty decent pullback, and that was a horribly sloppy sort of double shoulder move. But coming back, the yen's finally getting out of its overbought condition, watching for that pullback to about 131 area, 130.80, 131. Bitcoin actually was based off even the NASDAQ. This cycle's getting to the top and is not able to push up. It gets stalling out at this channel still. So I'm actually starting to watch more aggressively for a rollover move next week in Bitcoin. Tesla, see, we're back in the again. We never got below that key level. I kept talking about I'm still watching for another long-term rollover play, but Tesla's back to go-go stock land. We filled the gap. Then the next target was the 50% harmonic, which we just closed above, and my next target is at this 909 area, which is pretty major resistance up here in that flat 200. So anywhere between this 50 and 62.5, I'll be watching for a topping pattern next week. You wanted Meta? Oh, thank you, Tom. I was waiting for you to show up, Tom. You missed the beginning. You'll have to go back and watch the replay, Tom. No, this is not a potential double bottom. This is not a potential double bottom on Meta. Why? First, on the daily, you have a 1, 2, 3, 4 bottom. Depending on how you look at it, 4 to 5 bottom. And on the weekly, you have even a multiple bottom. The only aggressive weekly play is if the market kept going. But this, remember, Meta, even with a super bullish week, this is a very bearish, sustainable move. You do have a weekly buy on a close next week above this week's high. But cycles at the top still on the weekly and on the daily at the bottom. So you might see a little pop, but nothing I'd look at long term. Tom, I analyze both sides of the friggin' market, okay? And markets don't go straight up. You missed the beginning of the live stream. I already went through that there was, look, we at the close above the 62.5. We've already fulfilled that target. I'm not always bearish. I'm not always bullish. You got to analyze both sides. Markets do not always go up. That is a false statement. If you're just going to come in here and say this every time, it doesn't help because you're not actually helping people. All right? Where were you, Mr. Tom, if markets always go up? What happened since Jan? Down. We've been up now since we got the weekly buy signal was back on the June 21st, this close. There was a weekly buy signal. We've rallied up. We've hit the 87.5. Could there still be a little more upside in the tank? Yes. But markets don't always go up. So I'm not going to keep putting up your comments because they're absolute crap. They're not actually helping people. And you have to analyze both sides of the market. You're welcome, Paul. AMD. AMD, nice run to the other side, filled that weekly gap. We have that chips bill We had the chips bill. Again, we filled the daily ant near. Yeah, we filled the gap right there. I'm watching for another rollover starting sometime next week. A rollover play starting sometime next week. My next major target. So this is where a trail of stop is really handy. A trail of stop actually tighter rather than looser. Next targets are 98.91 to 101. There is no solidifying target yet. We don't have cycles at the top. We're just getting into a key topping area. So, again, when you get stuff like this is unless you get a major top pattern, and there isn't one. This is not, yes, we are getting overbought, but again, you can get more overbought. This is not a strong topping pattern, so you got to go with the trend until it ends, and the short-term trend is up. So that's where if you want an aggressive stop, you don't want it to really get back below about 91 on a closing basis. If you're aggressive, a more conservative stop, you don't want to get it about below 86 on a closing basis. You're welcome, Paul. Thanks, Pedro. LMT, potential re-entry after hitting first target. Potential re-entry. All right, LMT. Which target were you talking? We hit the first downside target, and now we've gone up. Again, your longer-term stops after this is a long-term pattern. So your long-term stop, and are you talking bullish or bearish? Your long-term stop is back above 440. Your short term, if you're watching for a rollover play, I'd be watching 424 to 426 on a longer term basis. On a short term basis, we're at getting to a top area, and we're also against some key resistance. So if we start rolling over into markets, this is where if you're long, you're coming off a low and you played a breakout here. If you're long, my stop would be back below 395. Okay, we don't have a strong topping pattern. We have minor resistance here. I'd watch for the stronger topping pattern. If you want a re-entry to go back short, it would be back below 3. If it starts breaking down below that ledge. And let's see where we sit. That would be the 50%. That would be an interesting front run pattern. And then if you do get the close on the daily below 62.5, then that's a really strong entry. But that breakdown would be a front run pattern, front running the close below 62.5 for another rollover play in that. I often get trapped on, hold on, I'm trying to get your comment up, Pedro. I often get trapped on these days. At first it looks like resistance, then it runs up and looks like some lower time frame bear flag that runs up forever. Then I'm scared too long because extended. What time frame, again, you have to go off. Because we cater to so many different people with different time frames in what market. So on the short term, again, this morning, I was watching, we got this reversal move. Remember I talked about this getting back above this resistance becoming support, which it finally did. It took a little bit of time. You got this nice, and I like to wait for key closes. Then you got the run up. You had this little minor topping pattern, but then it was just the end of day play. And you got to go with the grind higher in this. Because stuff overbought can continue to be overbought, especially at month end. Yeah, this was a valid double, by the way. But again, what do you watch for? I've stressed this a lot. If you're playing stuff short term, what do you watch for? And this just eked out the close. You had to wait for that retest again here. I did not like this move because it was actually to here. Because that close below 62.5 on the 5 minute. So I had to wait. There's another retest move here and then the after lunch move. But you're better to miss a move in these markets than try to jump on something that is extended. And that's the big challenge with these overall moves. You can also learn to look at the tick and the trend indicators for playing it intraday. Okay? And since this, so when you start seeing days that really start reversing between they can't sustain anything below 4 to 600 and they keep popping up, then they can't get any key moves. If you watch the cumulative tick index, this is pretty bullish, especially when you get pullbacks and it can't really get traction below 600 and it can't get key closes below 400. That is a sustainable, pretty bullish move. Just throw that out there. That's where it helps to watch market internals. But again, if you're going to err on the side, I'd rather miss a move than try to chase a move. MU, sure. Micron. So Micron, between, you got AMD, which is stronger. Micron has not had a lot of follow through, so Micron would not be my go-to thing versus let me just flip back. We already looked at we had the double in Nvidia, which has continued just a little higher. Forgot to take that off. You had the close above the 62.5. I'm watching for follow through. Why I'm jumping to this, I'll show you in a second. I'm still watching for some more upside in Nvidia, by the way. Before, statistically now, Nvidia's got a great stop area. Why does Nvidia have a great stop area? Because you have a potential double top. And just because you have a potential doesn't mean it has to trigger. So do you just go sell? No. Because we've also got the close above the 62.5. Now it's formed a double. It's stalled out twice against the 75. But that's a close above the 62.5 statistically favors the 189 level. So you can keep playing this for some higher price action going into next week, especially with daily cycles not yet at the top. But if you're trailing from lower, remember we had the double down here, and if you were still trying to stay in it for a longer term move, you can keep a stop. Aggressive stop would be on a close below the daily rotation zone. A conservative stop would be if the double triggers. Other than that, it's a trailing move higher. Why do I bring up that? Because this is still a stronger stock than Micron. Look at Micron. And I flip around. This is where you have to learn to play relative strength. All right, relative strength, you did not have great signals in, and remember, relative strength in NVIDIA, you closed above the 62.5. If you even closed above you got that barely eking out a close above the 50, and now it's caught in a range. I'd be rather playing the strong stocks in the semiconductor before the next rollover than the weak stocks. So, now, if you're focused on Micron, and that's the one you want to trade, the only thing now would be a breakout play above about 63.70, but you're running smack dab. You see this? That is a significant level. It's not only support becoming resistance, it's also a significant level. Why is it a significant level? Well, I'm so glad you asked, even though you didn't. Spike down low, pausing bar right after that. See that spike down low from back 12th of October? Then You have a gap down. Remember, the order of significance from things on a bar. Closing is the most significant price, followed by the open price, especially in the stocks. All right, and I'm talking a daily open price, not a pre-market open price. Why daily market? Because that's where you find the order and balance levels. So first and foremost is close. Second is open, followed by the highs and lows. But closes and opens are the two most important. And if you're going to rank them, close is higher than the open. But gap open, test of the low area, test of the low area, gap open, then emotional runaway move. Gap down, quick little gap fill, closing right at that level, then a gap away from that level that couldn't close. That is a significant level. So if you try to play something above the 50% harmonic, you are running smack dab into a harmonic level and the 62.5, and this is the rollover zone. And if you look, you can see this on the weekly. All right? This is the weekly rotation zone. So even on a push up, the long side is risky, even if you get a pop up in Micron, because it's setting up for a potential rollover play, especially with cycles at the top. A short play for me on a rollover move we pretty much have nearly a double key area right there. So I'd be looking, this would be a support zone, but you start getting a break below about 59 and a close below it solidifies the move. Then move stop down about 57.40 and then play for your other things. You can also put on your shorter term reverse harmonics. So you see you break down here. That's also right by the 37.5 harmonic. You target the 50 harmonic for a lower stop, which is also this base here. You break below that, stop down 62.5. You close below 62.5. Now you got easily the clear path move and the statistical run for your lows. And also remember why I like that longer term for the breakdown play is because even in the semis, after hitting the second target, we're still in long-term bearish mode. This is a corrective rally off the second target. Longer term, I'm still expecting it to hit 182 on the next major rollover play. So short term, you can be bullish. Look, there's still upside potential in AMD, and NVIDIA would not be playing Micron to the upside. I hope that, and why those two? Because in a sector that's rallying, you have Micron that's a lower probability and in a worse technical position, so you're better to play the stronger stocks and overall watch for another rollover play once we get another topping pattern. Let me know if that makes sense, Jake. Hey, Wavy. Well, you're welcome. You have a great weekend, too. See you on Sunday, Anissa. Mike, all in puts? I'm not all in puts. I'm watching for a topping play and to gauge the next pullback. So you're on the 5 minute, at least you're trading the minis. All right, I'm going to give you another key thing, Pedro. Don't get caught in the weeds. Pedro, use your higher time frame levels. Okay? And also, you're better to jump on things on the 5 minute when you get key closes on a 15 minute or daily in your, a 15 minute or 1 hour in your direction. Okay? And use a little wider stop since you're trading the micros, which is very smart. Use your higher, too many people on very short-term charts get caught in the weeds. And what I mean, learn to do your analysis on higher time frames. For example, I know you're not trading the daily, but you got the daily close above the 62.5. So that statistically favors the 87.5. So let's say you're playing this intraday and you start getting the bullish move. Well, you already have a major daily target built in there, so you can use that as a target. And then when I say play it on the longer term stuff, for example, you can use a short term entry. Let me show you here. You don't have to also catch every move. What is this? Major resistance on a 1 hour. That closed right at it. This was pretty toppy, but this pulling back in there, so you could have entered here and just kept a wider stop. And when I say wider stop, because you're trading the micros, even if you're trading on a 5-minute time frame, you can just reduce your position size and put a stop below the bottom end of this channel on a closing basis. But look at this. You get a nice little bottom tail and a hourly close above that. That's an easier entry on a 5-minute. So watch the longer term time frames because they will give you more consistent moves. For example, here's where that triggered. Okay? So you could easily get in. This is where that 1 hour move triggered. Back above here with that nice little closing in the upper end of the range after testing key support. That was the test of key support, getting back above there. Got the pullback move, and then you get the resumptive trend. Too many people are trying to say, okay, I'm focusing on this, I'm focusing on this. And it's harder to see, but you zoom out. You zoom out. And you use your higher time frames. Look, you got the rising 1 hour rotation zone, and then you can just fine tune the trade on the 5-minute. But you're better to use some wider stops using the higher time frame patterns and then fine tune it on your lower time frames, and then you can manage the trade. Especially trailing below the 5-minute rotation zone. And what's this? A little double top. So you're not getting necessarily out here, although you had the 87.5 harmonic. You could have used this and just sort of aggressively trailing up the stop. Worst case then, okay, we've hit that daily target. Let's see if I can eke any more out. Oh, wait, double top triggered. I'm out. I'm out. Look, I even got a little better. But you're not trying to grab, you're trying to take the chunk out of the middle. Remember, the chunk out of the middle. Let's say you got in on that 1 hour close, okay? You're trading a 5-minute, but you got in on that nice 1 hour close. The 1 hour close right here. And you run it up and you get out on the 5-minute close below the double top. What'd you grab? 64 basis points. That is a fantastic move. Instead of getting shaken out, instead of doing this, why are you playing it? Because you're watching the bigger patterns. And this isn't just, this is very helpful for stocks or whatever you're trading. Even if you're trying to trade things on lower time frames, okay, like Tesla, fine, watch the bigger patterns. All right, you can see bigger patterns are a lot easier to trade than smaller patterns because there's more noise on your smaller patterns. Let me know if that makes sense, Pedro. QE is not still on, Coco. You were referring to what I was just talking about, Pedro? That's where I want people, if you're trying to trade stuff shorter time frame, use longer time frame analysis. And then you can fine tune your entry on shorter time frames. Especially using the micros. Oh, well, you're referring to TomTom. There we go. What will be a strong signal to short this rally? Well, again, I will watch for a topping signal to occur. And generally, the first little top signal in this kind of rip your face off reactionary rally is not the best one. The second one is so it's nice to gauge the first pullback move and then gauge the second reaction to that before establishing. You can always establish short, smaller position shorts in the first move and bigger ones on the second one if we get a really good pattern. There is no topping pattern yet. And just because cycles are at the top does not mean you just short. You have, for my book, you have to wait for a signal. Hey, John, will you do Microsoft? Sure. Microsoft right in here, I'm watching for another potential rollover play next week. Your key support is back at 269, but I'm watching. This was major resistance. Remember, Microsoft did not have fantastic earnings. We've got the sympathy rally, but here's your major topping area here. The only way I can get even more bullish on Microsoft is if it can eke out a close above 288. Otherwise, I'm watching for a topping pattern, but then that will not be the first, as I just covered. I would not go short initially because there's a lot of key support here. It's got to chew through some of this prior resistance becoming support before a big rollover play, especially with it technically back in neutral mode. And can't get really bullish until we get a close above 309, which I do not see anytime soon. And we're getting the reaction after hitting the first target from the major topping pattern. So, by the way, that stop for the major topping pattern would be on a close above 309.12. So, still in long-term short, short-term bull. Just like Apple, still in short-term bull, triggered that daily double bottom, running up, hitting the first stop reduction zone and back above the 200. So this area is pretty key support with a rising rotation zone. So does Apple still have some more potential upside? Yeah, the next, I'm really focused on this 166.25 area. I know that wasn't, I already went over Meta. Please watch at the beginning, watch some of the recap. I did not go over Twitter. So, I mean, Twitter is still the Elon play, but that's the trial date set in October the 17th through the 21st. Your key support, again, this could be, with judges, they have to do discovery. There's been an independent person assigned to each side of the case to review discovery requests. There can still be short-term rulings that favor one side or another, so this is still a story play. Your next targets, after we completed the double, it's now broken out above here. Let me reverse these harmonics. So keep in mind, this is still a story stock play. My next target is this key low with the 50% harmonic to the upside, 43.50. And then you have a gap right here with a breakdown zone. So the rough targets, the target area for that is roughly about 45. So those are your targets. Your key support, you have a support at about 40.70, and then your next support level is 39.88. You do not want, if you're playing this short term, because again, it's still a story stock, you don't want to see a close below about 39. And you have to be prepared. Anything can happen with a Twitter play too, because of, you got the court date in October, and that's a long way away. But you have both sides. You have discovery, and you can have independent discovery rulings, whether one side's being unreasonable or another. And depending on how the market interprets that, will determine short-term bullish and bearish moves. Is Microsoft filling the gap? Which gap? This gap? I would not target the Microsoft filling the gap because statistically you'd have to get a close back above that 288 level. I just love this. What do you mean, no more bear market? I'm still long-term bear. I think the talk of the recession is canceled. Do you think Beyond can break or will shorts get squeezed a while? I'd have to look at the I haven't looked at the short interest in Beyond anymore. Beyond was this horribly sloppy double that came up and hit the stop reduction. There is nothing. I do not particularly like Beyond long term, and their next earnings will probably be horrible. But I could not go short until a close below 27.61. Keep in mind their earnings are on the 4th of August, which is coming up next week, and they could really be in a position to miss. Baba is dead. I don't play Baba, but I'm not playing anything. You had the long-term double, which confirmed but was not triggered. That's why you got to wait for that close and then just dropping back down. Baba, to me, not playing it for the bullish side at all, especially with the close back below the 62.5. This statistically favors a return to 79.82 to the lows. But stocks always go up. So, you know what? You might as well just buy it because stocks always go up. Stocks always go up. This is going to turn into a triple anyways after never triggering that double. Confirming but not triggering. It's why you got to wait in the bear market. But boy, stocks always go up. Huh. Yeah, I would not play anything with Bob. I would not play a lot of these Chinese stocks at all right now. Qualcomm. Qualcomm. You had this reversal pattern down there. You're back to. Let me look at that weekly again. Rejected at the 200. Remember, 200 is an area. Whew. Daily cycles are at the bottom, weekly at the top. I hate when you got mismatch. Your aggressive buy would be on a daily close above today's high, and that's only valid for the first couple days of next week. Overall, with daily cycles being at the bottom and weekly cycles being at the top, I'd be patient on this unless you really need to play it for an aggressive buy. But then it would be a very tight stop and a tight stop below today's low. Why? Because you could get a little pop. You could get a little pop in here. You do have a nice little gap after earnings, but you could get another pop and then a more substantial rollover play. That's why I hate mismatch cycles. Especially remember, the NASDAQ's made a major run, right? And look at Qualcomm. I know they had earnings, but you could not get a run going except for this little bounce today. So this is where when I see something like this, John, when I see something like this, I'll find something better to trade. Because yes, you can get a pop out of it, But I don't like the risk to reward levels because of where this sits with everything going on. So I'd rather, yes, you can get an aggressive buy, but you got to keep a tight stop. I'd rather play something that's uh, more sensible. Like I'd rather at this point play Apple on a pullback because it's still got that potential or the trigger double bottom with higher price targets than I would in a Qualcomm. Thank you, Jake. I see the market. We don't have a strong topping pattern yet, and we can get some follow through into the beginning of a month. Between month end, yesterday and today, and the beginning of the month, you can generally get some follow through, and it can still get choppier, but we don't have a strong topping pattern yet. Okay? And we have, again, well, how do I get to that position? We're trading with the short term trend. We have hit some key levels. There is some potential slight more upside. And we don't have daily cycles at the top, but they're getting into that topping area and we are overbought. So this is where, from a perspective, would I be getting aggressively long here? No. Would I be running up a stop and trailing a stop much more aggressively, watching for those topping patterns? Yes. But if you're not already long, I would not be looking at this area to be aggressively long. You're better, especially if we get a top pattern, make a pullback and key levels hold, wait for that next rotation back up for a long. Yes, the stochastic RSI works in stocks. I've been using it trading crypto. I like it for judging cycles because you're combining those stochastic and RSI and you get some smoothing moves that are better. So I do like that. I do not like it as an overbought, oversold indicator. I like the RSI itself as an overbought, oversold indicator. I like the stochastic RSI for cycle analysis. Coco, that's actually a ridiculous statement. Even if there's a nuclear war, if there's a nuclear war, the markets will go on halt. Okay? And then you have no gauge of the fallout. So that is absolutely an asinine comment, Coco. Asinine comment. And is that one nuke dropped, or you get a few good dozen out there? We go into nuclear winter, and I don't really give a crap about where the S&P is trading then, because you're going to dump way before they pump. So that is an absolutely asinine comment. On Apple, do you expect it back to test the 157 area before we advance? You guys are trying to fine-tune moves a little too much. You could easily get a pullback. If we do get a short-term top in the market, you could easily get a pullback between 157 to 155. Keep in mind, if you want an aggressive stop, you're watching, I'd just make it roughly below 150. You have the 37.5 harmonic. You have the daily rotation zone. You have this key low at 150 something. I'd make it on a closing basis below that if you're trying to trail something. If you're watching for another aggressive entry, your super aggressive entry would be on a pullback to test the 200 if the 200 holds. Remember, that's now first level support. Your more conservative would be on the gap fill with the rising rotation zone on the daily. Okay? There is a lot of end of month money being put to work right now, and a lot of money, as I said, sitting on the sidelines and you have buyback programs that were freed up. Remember, buyback programs were on pause, and they kicked back in yesterday. So yes, there is. That's why I said there was a certain amount of floor under this market at the end of the month, even going into the beginning of next month. For double play, either up or down, do both of the numbers have to be the same number? They don't. The lows do not have to be equal, or the highs do not have to be equal, if that's what you're asking. They have to be within a range. In my opinion, is Airbnb a tech stock or a real estate stock? It's a mix, and it's also a travel stock. It's a mix. It's more traded as a tech stock, though. What's Kathy doing besides taking a bath on Teledoc and Roku? I don't follow her inflows and outflows. I know, but I know, hey, Roku's getting close to my long-term levels. It'll probably still rally a bit after this gap, but it's getting close. What was the target? Look how look at the target. Look at this. Triggered back on the 15th of November of last year. We're finally getting, and I had so many people telling me I was insane. But stocks always go up. Wait, what's happening? Stocks always go up. Hold on. This has been going down, and we're closing in on my final target, $58. And I think that's still going to go below that. This is going to round trip eventually to 25. But my long-term probable target is closing in. Stocks always go up. What T-Doc do? Did it bounce? Yeah, it's going to... This is probably going to do the gap fill, I bet. Or at least a gap fill to the breakdown zone before the next rollover on that. T-Doc's an absolute disaster. Oh, my goodness. But what's so interesting is Tesla's keeping ARK propped. And ARK's technically triggered a double bottom pattern. So I can't get bearish back until below 40.50 again. The last thing on anybody's mind is the market with nukes flying. Yeah, you see the nukes are dropping. The Fed Powell's going to hold an emergency press conference. We're going to cease quantitative tightening. We're going to cut rates, and then it goes up in a ball of smoke. I mean, what? You know what? I don't even know why I bother responding to some of this stuff. I guess I'm just a glutton for punishment. You're welcome, Ted. These comments are exactly why we're going to see retail investors get murdered in this market. They're going to slit their wrists with their diamond hands. And if you think we're at a bottom, you know what? Once people stop showing up to this live stream because they don't want to see another friggin' stock, then we'll be at a really long-term bottom. Can you get short-term bounces? Hey, Sterling, you've been around for a long time in this channel, right? I mean, it's been a long time. How many times have we talked about rip your face off rallies in bear markets? How many times? Walker, you've been around here. How many times have I talked about rip your face off rallies in bear markets? Is this a surprise to anyone? If it is, you've had your head in the sand. My brother-in-law is a market maker, and he said the same thing. His business is bracing for a massive crash. How much range for the double to be invalid? Start going. Watch for pullbacks. Here's your key area. Watch for pullbacks from low to high with that if it come back here, if your right side's bottom is higher than your left side, watch for it to at least pull back below the 75% level. Market makers, why are market makers a joke? See, Coco, you're showing your ignorance again. And by the way, I used to be an options market maker. So market makers are not a joke. Market makers have a specific role in the market, and you should be glad they're there. And what are the point of a market maker? They're to make an orderly market, especially when there is none. They're supposed to. That's the role of a market maker. And they're supposed to pair up orders. They are not a joke. They've become more of an issue with big firms taking over the role over the last few years, and with dark pools and everything else. However, you cannot say they are a joke. That is a completely ignorant statement. I would not want to be in a market without a market maker, because they are supposed to be the market of last resort. That's actually what their job description is, and that's why they have a role defined by exchanges. Okay? So that is a complete ignorant statement on your behalf. I skip back. Amazing explanation on the higher time frame. Pedro, that's what. Thank you. So I want you to make that part of your homework, Pedro. And if you already aren't subscribed, please do consider subscribing. I haven't even put that up. By the way, if you are new here or catching it on replay and you find this information helpful, please give us a chance to consider subscribing. As you see, I'm not pushing anything for sale. I'm trying to get people to learn how to analyze a market and save themselves, and at least get to the point where they're not flushing money down a toilet. Because the longer you're involved, and I'm going to tell you something else, the longer you're involved in the markets and the longer you can stick around, it's like anything else. You learn over time. So the longer you can withstand, even take minor losses, the longer you can keep a trading account or an investing account intact and learn over time, the better off you will be. Just like you don't become a master carpenter overnight. You don't take a woodworking class and become a master carpenter overnight. It takes years. You don't become a journeyman plumber overnight. You can go to plumbing school, you can be an apprentice, but you don't learn everything that you need to be a journeyman plumber or a journeyman electrician overnight. You can't get exposed to that many things overnight. You can get taught the basics. You can get taught how to do things in a sensible manner. You can get taught how to put pipes together correctly. Whether they're metal, whether they're brass, whether they're PVC, you can get taught how to wire things correctly as an electrician. You can get taught the basics of electricity so you don't electrocute yourself. But you're not going to get involved in every situation the day one out of being an initial apprentice or even getting taught the basis of electricity or plumbing. You're going to get that over time. And that's what I'm trying to give people in these markets, is a structured approach and some discipline so you can learn to either trade or invest, or hopefully both, over time, and keep your account intact or your losses small while you learn. I think you were referring to Roku, Josh. I bet you that's the one you were referring to. No, the Fed is not a market maker. One of the biggest market influencers has become the Fed. The Fed is not a market maker. One of the biggest influencers and provider of absurd liquidity is the Fed. Notice you left target line in place for Apple after removing the wedge. Are you expecting a return to that line? Oh, this? No, I should have removed it. Your key support, thank you. I just did. Sometimes I don't remove lines. Your key support line, if you're using a key support line, is right there right now. I was not. That was off the table. Good question, Patrick. Thank you. Hello, Lauren. The core watchers will still be here. Well, thank you, Ted. You said it every day for a long time. Thank you. That's the rip your face off rallies. This is my first time in a bear market and really enjoying it. Well, I'm glad. I would much rather be in a bull market. You know what? I would rather be in a bull market from sensible market valuations where we don't have the Fed QEing it. That's what I would rather be in. Because then we're at a sustainable long-term market from sensible valuations. Ever since the bear market started, but everybody, this is why you get everybody. Thank you. Thank you for, I was just making sure I wasn't insane. Mike, I should wear a green shirt next time. Why? What do I have on today? This is green in it. See? I'm partially disappearing. Ah, another Grateful Dead shirt. Got the Dead. Going to be rocking with the Dead this weekend. Calm down and watch your high blood pressure. You have a great day too. I didn't look at the chart that much. Bitcoin, with the market being that strong, this is, by the way, not a double top, two tops. Bitcoin has some proving to do, especially with the NASDAQ rallying and Bitcoin not being able to get a move on. On a break below today's low, going to start watching for the bigger pullback. So I'm getting cautious, but daily cycles aren't at the top yet. Weekly are at the top, but not rolling over and stalling out against a weekly rotation zone. But I still don't have a strong topping pattern yet. Well, short ladder attacks. So that's why stocks always go up to short ladder attacks. But if stocks always go up, then short ladder attacks, or is that when they go down? Because the shorts are attacking with, still don't know what a short ladder attack is. I've been in this business for 30 years, and I don't know what a short ladder attack is. Well, I'm tired. No, I'm just going to call out crap because I'm actually tired of it. And people watch this on replays. And I'm not going to let this stuff keep going on especially with absurd comments. Because it's not helping somebody who's especially newer or tuning in for the first time on a replay if they think this stuff is taken seriously. I'm just going to catch up with these comments and I'll call it a day. Just be careful. Never seen my brother-in-law warn me before, even in big. Yeah, I mean, you can get scared as a market maker. There's stuff that, look, especially when you get an imbalance of flows or start seeing something in the market makers watch price action every day. I give market makers, especially the good ones who really judge price action, if that's your job and doing order balances and everything else, you get to learn price action really good. I don't discount what market makers say at all. And I thank you for sharing that, Waka. I'll take that under advisement, John. I told him it's fine. I am short. He said, oh, well, he'll eat you up, huh? Well, see, he's a market maker. Just kidding. That's his job, to make markets. Market education is very expensive and everybody pays a tuition. It cost me tens of thousands before I found PTP. Don't always win. You will not always win. But I know why I'm making the trades and when I will get out, and that's part of the thing. And if anybody says you'll always win as a trader or investor, it's an ignorant statement. It's a completely ignorant statement. As both a trader and investor, you will have losses and you have to learn how to take your losses. You like hearing how I got your start? Well, I went down. I graduated from Northwestern University as an electrical engineer, and I went down and got an internship with an market making firm, which was an unpaid internship, which means I delivered pizzas at night. And many nights I would work till store closed at 2. The store would actually close at 1 a.m. By the time we cleaned up, it was 2 a.m. And I had to be up at 5:30 a.m. and into the office by 6. And I did that for over 6 months, and my paycheck was delivering pizzas while I was learning what I was learning. That's how I got started, in a nutshell. So if people think it's glamorous and everything else, you put in a lot of hours. I mean, I lived on 3 hours sleep. I got to sleep in a little on the weekends, but I generally opened the pizza shop on weekends, which means I had to be there at 9:30. So even when I got to sleep in, it was about 6 hours, and that went on for over 6 months. Hey, what video would be best to watch to get a rundown of how you feel about Tesla? Uh, I'll tell you my rundown on Tesla. Long-term bearish and valuations are insane, featuring a lot of uh, headwinds with competition, uh, major lawsuits. So the risk is to the downside, but it's Tesla. So you watch for the key areas to reestablish shorts. Only bullish thing are short-term plays in Tesla for me. Everything else is the eventual topping play and another rollover play, especially going into recession, not a recession. When automakers, even Tesla, there's cutbacks and everything else. Now, short term, you also have this. What is this? A tame inflation gonna exacerbate inflation bill that's going through right now, which has more vehicle credit, so that could boost, especially next year, all EV sales. So that's why, from a short side, have to be very picky. But long term, watching for a rollover plays, especially based off valuations and based on the Elon factor. Even during a nuclear beer, I don't know if I'll be live streaming if nukes are falling. Ted or Waka Waka. All right. Let's see. I like the RSI as an indicator for pullbacks. Many of the big trends bounce, reject to similar levels. I like 1 hour 50 RSI bounce for an uptrend or daily pullback to daily. Well, I'm glad you have a system, and those are pretty good. I like the RSI too. Mike's line, he was the one they wrote the movie Boiler Room about. No, thank you. Oh boy, we got the. Could somebody report those? Why are you trying to spread rumors, Sterling? Oh boy, I would never be involved in a boiler room. That would disgust me. I would rather go back to delivering pizzas. Boy, I would. You want to talk about complete trash and scumbaggery? You believe does stock split has it been approved by the board? Has it been approved by the shareholders? Thank you, Sterling. All right. With that, I'm not seeing any more questions. Thank you for being here. Thank you for listening to me ramble on. This is a long live stream. I wasn't planning on going this long. All right. So thank you. Again, thank you for so many people for sticking around on a Friday afternoon. Go have a nice weekend now. Go enjoy yourself. Turn off the computer. Get away. I will be back on Sunday afternoon, and we'll come up with our game plan for next week. You are welcome, Strategy Free Man. Mike CTV. You are welcome, Waka Waka. Hey, thank you, Anissa. I bet you it's late there. Thank you for staying around and staying up late with us. I hope you have a wonderful weekend. Again, thanks, Waka Waka. You too, take it easy, Coco. Thanks, Sterling. Thank you, John. Talk to everyone on Sunday who can make the live stream. Oh, 11 p.m. here. Do you guys not have anything better to do overseas? I appreciate you watching me. Maybe I'm just a nighttime entertainment and you guys sit back and laugh at me. Hey, Jacob, which is fine. Which is fine if you do. With that, I will call it an evening and I'll talk to everyone later. Bye for now.